ZIM has declined by more than 60% from its peak. If you look at its fundamentals, you can see that ZIM has almost 12 billion in assets, of which cash is 4.4 billion, higher than its market cap, which is around 3 billion. Plus, they had 4.2 billion in earnings for the last 9 months. That's why you see a PE ratio around 0.5. Moreover, they also pay a fat dividend. And when you see all those great fundamentals, you might say, what a big deal. But don't rush. There are few things you need to know before investing in ZIM, especially about that dividend. And in this stock analysis, I'll help you to see their business model, their fundamentals, what opportunities they have, and the risk for this company. So stay with me to the end of this video and you'll find this stock analysis, the outlook for this business, and if ZIM is a good investment. And if you find value in this video, please give a like and subscribe to see more videos like this, because I want you to succeed. Let's begin. ZIM Integrated Shipping Services, as the name suggests, is a shipping company from Israel, and their business model is like this. They have a fleet of around 100 vessels and operate on several routes around the world. They have access to multiple regions, such as Pacific, Intra-Asia, Latin America, and others. Their advantage is that around 96% of their fleet is leased. They own a few vessels, and depending on supply and demand, they can decrease the number of ships or increase it. They have that flexibility that allows them to take advantage when rates are high and reduce their costs when rates are low. So their business depends on freight rates. If they are high, they will make more money and increase their fleet. If rates are low, they will make less money and reduce the number of ships. You can see better in this image their most profitable regions, such as Pacific, which is about 45% of the total revenue, Intra-Asia, Atlantic, and others. Each region has its own freight rates. For instance, the price of shipping goods in the Pacific region is higher than in the Latin America, and these rates fluctuate based on supply and demand. If there are some supply issues in Asia, the price of shipping services will increase in that area, and ZIM will make more money. Now let's see their fundamentals. ZIM has a market cap around 3 billion at the current price, and they pay a dividend which represents 30% of their income. You see 100% in dividends on many websites, but that is not the real yield. I'll tell you later how much you can expect from them. The revenue is expected to be around 13 billion for this year, and the earnings around 5 billion. And next year, a decrease in the revenue and earnings is expected. Now, as the rates have declined so much, and if they keep going down even more, then those estimates might be even lower. Total assets are about 12 billion, of which cash is around 4.4 billion. 4.6 billion represents their vessels, and 1.2 billion is their equipment. One important thing to know is that their vessels are chartered. As I said at the beginning, 96% of their fleet is leased. This means that after they finish their contracts, they have to return the vessels, and the same for their equipment and containers. So you can rely on those vessels. They only have the right to use the assets. They report those ships as assets, because that is the accounting rule in Israel. And total liabilities are 6.1 billion, of which debt is approximately 4.7 billion. That is lease liabilities, the money they have to pay on those vessels. So what you can rely on is their cash of 4.4 billion. You can see better in this image how many vessels they own and how many are chartered. So they only own 4 ships, the rest are leased. This image is taken from the latest annual report. Now let's see what the opportunities and risks are. You can see in this image the global freight index. Rates went up almost 9 times from 1,000 to over 10,000, and then they started to decrease. The rates are currently around 3,000, and they might decrease even more. You might see another decline of 50%, because many governments want to keep rates low, to have that stability as it was before 2021. In this way, their economies can grow better. You see this huge increase in freight rates due to supply issues and port congestion. But as you know, problems don't last forever. People always find solutions. You might see other supply issues in the future, but it's hard to predict those things. You'll certainly see many ups and downs, but I don't think rates will go back to 10,000 in the near future. You had a special case with the pandemic, which created a lot of problems, and the chances of that happening again are pretty slim. You might see some other problems, but not as big. The good news is that they will pay a dividend. As they made 1.1 billion in the third quarter, they decided to pay out 30% of earnings as dividends. This means $2.95. At the current price of $25.57, you will get a dividend of about 11.5%. Now, if the stock price goes down even more, your yield will increase. Keep in mind that if you want to get this dividend, you need to buy the stock by November 29th. And you might get other dividends, but that depends on the freight rates. Next quarter, if they make another 1 billion in earnings and they pay out 30% in dividends, then you might get another dividend of 10%. And next year, if they make 1.5 billion in earnings as expected, then you might get another dividend of 15%. But again, everything depends on the freight rates. If they decline even more, ZIM will make less money. Their plan is to pay out 30 to 50% of earnings as dividends. And about their cash of 4.4 billion, someone asked if they plan to pay out 50% of it in dividends. And the answer was they're going to focus on growth. They might acquire other companies, and because there is that drop in freight rates, it's better to have cash on hand to survive during that time. Now let's discuss about investing in this company. The stock price went up a lot and then it started to decline. And in order to avoid something like this, when you invest, you also have to see the risk, how much money you can lose, and the reward, how much money you can make. So the risk of investing in ZIM is that you might see another decline of 50%, the market cap to be around 1.5 billion. This can happen if freight rates decline to 1.5 thousand. Now if they decline even more, then the market cap might be less than 1.5 billion. And the reward, you can assume the dividends they will pay. As I said, you will get 11.5% in dividends at the current price for the third quarter, another dividend of 10% for the fourth quarter if they make 1 billion in earnings, and another dividend of 50% for the next year if they make 1.5 billion in earnings. So in total, you might expect around 36% in dividends for this year and next. But be aware of the risk. You might lose 50% if freight rates decline even more. So it's up to you if you like the risk and the reward you get. And tell me in the comments, where do you see this business in the next 10 years? And if you find value in this video, please give a like and subscribe to see more videos like this because I want you to succeed.